which is proudly hosted by Coal Metal Asia magazine together with Petromindo. On this virtual conference today, we will try to elaborate together and discuss about the change of coal supply and demand as the impact of Russia-Ukraine conflict, the prospect of Indonesia coal to European markets. Well, as you know, the Ministry of Energy and Mineral Resources previously said that a number of European countries may sought for coal supply from Indonesia. And hopefully we can get clearer point of view from our speaker, Professor Irwandi Arif, as our keynote speaker. Also, there will be discussion about what will be the changes in global coal supply and demand trend in this second semester, the changing of coal demand from China, from India, and many other interesting topics that will be delivered by our excellent speakers for the next couple hours. So I hope this webinar opens a fruitful and continuing conversation among us. All right, now I would like to give a warm welcome to all distinguished speakers, panelists, and moderator who already joined us today. Please welcome the first speaker, Professor Irwandi Arif, Special Staff for Mineral and Coal Governance of Ministry of Energy and Mineral Resources Indonesia. Selamat siang, Prof.
Selamat siang, Bu Desi.
Terima kasih sudah bergabung. And please welcome Mr. Freddy Styrmos, Vice President Generation Fuels and Dry Bulks at Argus Media, London. He's joining from London. Hello, Mr. Freddy, Pak Freddy. Pak Freddy? Oh, okay, he's already on the line with us. Please welcome Mr. Jimmy Deng, General Manager of Century Commodities Solution. Hello, Pak Jimmy.
Yeah, hello, Bu Desi.
Thank you, Pak Jimmy, for joining us today.
Thank you.
Yes, and please welcome our next speaker, Mr. Dhruv Dheer, Senior Research Analyst of Indian Coal Market for McCloskey from India. Hello, Mr. Dhruv Dheer.
Yeah, hi, hello. Thank you for having me.
Thank you very much for joining us today. And please welcome Mr. G. Pe, Energy Finance Analyst at the Institute for Energy Economics and Financial Analysis. Good afternoon, Mr. G.
Hi, Bu Desi.
Nice to see you again.
Always.
And please welcome Mr. Ramli Ahmad, President Director at Ombilin Energy. Hello, Pak Ramli.
Hi, Bu Desi. How are you? Good to see you and everyone else.
Thank you, Pak Ramli. And please welcome our moderator, Bapak Hendra Sinadia, Executive Director of Indonesia Coal Mining Association. Selamat siang, Pak Hendra.
Selamat siang, Bu Desi. Good afternoon, everyone.
Ya, terima kasih sudah bergabung, Pak Hendra.
Yeah.
And on behalf of the organizing committee, I would like to deeply thank and give a sincere appreciation to our wonderful partners and sponsors. Please give a warm applause to our great sponsors. Thank you to our gold sponsors, PT Indotruck Utama, PT Geoservices, PT Chakra Jawara, PT LiuGong Indonesia, PT Indotraktor Utama, PT Lumoso Pratama Line, PT Triputra Energi Megatara, and PT Antareja, Mahada, Makmur. And thank you also to our platinum sponsors, PT Mifa Bersaudara, PT Jasa, Mutu Mineral Indonesia, and PT Kalimantan, Prima, Persada. Thank you very much for your great contribution in sponsoring this event. And thank you also to McCloskey as our media partner of this event. Ladies and gentlemen, during this webinar, I will share a questionnaire form in the chat column. Please fill in the form because there will be giveaway for 5 lucky participants. There will be 5 vouchers of e-money or digital wallet for the lucky one presented by our partner sponsors, Lintas Arta. We will announce the winner at the end of this webinar. So stay tuned and thank you, Lintas Arta. Before we start, I would like to inform you that we are open to any questions. So please type your questions in Q&A tab and we will discuss it or our speakers will answer it in Q&A session. So now, without further ado, I hand over the virtual floor to our moderator, Pak Hendra Sinadia. Please, Pak Hendra.
Thank you very much, Bu Desi. Good afternoon, ladies and gentlemen, all the panelists, speakers, Coal Metal Asia, Petromindo, and all the participants of the webinar this afternoon. Thank you for attending this event and also the sponsors. Today's webinar is very interesting, the topic, yeah, because of we've been waiting for this topic for quite some time, yeah. The impact of the geopolitics to global seaborne market, and the organizers put this very specific topic, impact of Russia-Ukraine to the global seaborne market. But in fact, this is the implication will be larger, not only Russia and Ukraine, but we believe that also the geopolitical dynamism in the other part of the world. We see the tension in Taiwan Straits, also the diplomatic relations between Sino and Australia, and we will have G20 coming up. So there are a lot of going on the world right now that will reshape the global seaborne market, and we are going to listen to the excellent speakers especially on the market and how the impact of the Russia and Ukraine conflict to the rebalancing of the global seaborne market. As we see in the past few years, the impact of the diplomatic relation between Australia and China has affected the rebalancing of the import from Indonesia to India and Indonesia to China, and also Australia import to India and China. And it's very interesting to see the impact of the crisis in Russia and Ukraine to Indonesia, because of we also heard that Russia suppliers, they're diversifying their market to Far East Asia, especially in China. So that will have an impact to Indonesia. So today we are going to listen to the presentation on the geopolitical, but also how the Indonesian government and Indonesia government see this dynamism, and how the government will support the sustainability of the industry to gain advantage of the market. So today we try to maximize our discussions. Hopefully before 1600 we will complete the discussion. So without further ado, we'd like to listen to the opening speech from the government, representing the government, Professor Irwandi Arif. He's the special staff to the Ministry of Energy and Mineral Resources. Before Pak Irwandi delivering his speech from Indonesian Coal Mining Association, we'd like to inform you that we've been quite busy facilitating a meeting between prospective buyers from European countries and also from Indonesian suppliers. In fact, we have just received the invitation from the Poland ambassador to receive the visit from a big, one of the biggest state-owned enterprise from Poland will be coming. The CEO is a former minister in Poland. So yeah, the company has been visited Indonesia for 2 times. So you can see the interest of the Polish buyers and others buyers from Germany and other parts of the European Union members. So after Pak Irwandi, we'll listen to the presentation from analyst Argus, and we have also excellent lineup. Ramli also is here, Jimmy Deng, Mr. Dhruv Dheer, and Jipe. So bear in mind. So today is very interesting. So if you have questions, you can posting it to chat column or you can raise your hand and we'll take your turn. So without further ado, Pak Irwandi, so special up to the Minister of SDM. Thank you.
Thank you, Pak Hendra. as Executive Director of Indonesian Coal Mining Association, to the Chairman of Petromindo.com and Coal Metal Asia Magazine, distinguished speaker today's webinar, Mr. Dhruv Dir, Pak Ramli Ahmad, Mr. Freddy Sarmos, Mr. GP, Mr. Jimmy Deng, and distinguished ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon and best wishes to all of us. We always give thanks to God. We can meet virtually to attend the coal market and price outlook in H2 webinar organized by Coal Metal Asia Magazine and Petromindo.com. On this occasion, allow me to express my view on the implication of rising coal demand in the global market to Indonesia coal production in 2022. Distinguished participants, ladies and gentlemen, until June 2022, this year, Indonesia coal production is 310 million ton, or around 47% of the target production plan in this year. Of this total production, 2,008 million ton have been exported. Export realization until June this year reached 43% of the planned export target. Meanwhile, 94 million ton of production are used to meet the domestic market obligation. There are 10 main destinations for Indonesian coal export in the last year, including China, India, Japan, Malaysia, South Korea, Philippines, Taiwan, Thailand, Hong Kong, and Vietnam. The export portion of these 10 countries in the last year reached 96%, with a value of $30 billion US. Of the total value of coal export in the last year is 21.6 billion. Until June in this year, the top 10 coal export destination were China 31%, India about same 30.9%, the Philippines 7.5%, Japan 6.3%, Malaysia 6.2%, South Korea 6.6%, Taiwan 4.1%, Thailand 3.7%, Vietnam 3%, and Bangladesh 1.4%. In addition to this country, Indonesia coal is also exported to several other countries, including Pakistan, Netherlands, New Zealand, Spain, Italy, Greece, Switzerland, Poland, and others. Ladies and gentlemen, Russia coal production has increased in 2021. Previously, in 2020, Russia coal production was 400 million tons, and in the last year, it increased to 434 million tons. Based on the data Ban Zero Costa, China is the largest importer of Russian coal, mounting to 40 million tons in last year. Apart from China, Russia also exported their coal to other countries such as South Korea, Japan, Taiwan, Morocco, India, European Union, and others. In the last year, Russia exported 39 million tons of their coal to European Union. Ladies and gentlemen, according to Wood Mackenzie, global coal demand for this year is projected to increase 0.6% compared to 2021. The largest increase occurred in Bangladesh and Pakistan, In Bangladesh, import coal demand in this year is projected to increase 22.8% from 8.8 million tons to 11.4 million tons. While in Pakistan, import coal demand in this year projected to increase by 21.3% from 19.9 million tons to 25.3 million tons. If you see this slide, data from the Indonesian Central Statistic Agency, BPS, state that there was an increased demand for coal export to European countries in Q2 this year, such as Poland, Italy, Switzerland, and Netherlands. In Q2 in this year, the export value has increased to $192 million from the Q1 in this year, which reached only $78.4 million. Referring to this data, the Indonesia coal export to those European countries until Q2 in this year, like Italy, reached $111.7 million, Netherlands about 79 million, Poland about 43.2 million, and Switzerland reached about 15.5 million. Poland has ordered about 53 tons of 53,000 tons of Indonesian coal, while Germany is reported negotiation to order Indonesian coal. Germany coal demand for this year is about 31.5 million tons, of which 50% of demand is planned to be supplied from Russia. However, due to the Russia-Ukraine war, Russia will close its supply coal from August this year. Germany hopes that 50% of the coal demand, which was originally supplied by Russia, or around 5 to 6 million tons of coal, can be supplied by Indonesia. Apart from Germany, India is also interested in Indonesian coal due to the soaring demand for electricity because of the heat wave in their country. It is estimated that the demand for coal supply from Indonesia still has potential to continue to rise, especially from the Western country that import Russian commodity, as well as preparation for Western country to face the winter season. Distinguished participants, ladies and gentlemen, Indonesia is predicted to be ready to supply the coal demand, not only demand from Germany, but also from the several other European countries, such as Spain, Poland, and even India. The war between Russia and Ukraine affected Indonesian coal production, but not significantly. There are some challenges that need to be considered, include the uncertainty of the climate in the start of the year, coupled with the call for an energy transition that has caused existing banks to start reducing or limiting loan to companies related to the exploitation of fossil energy, thus affecting upstream and exploration activity. In addition, other challenges that need to be considered for export, especially export to the market that are new to Indonesia, such as Europe, high transportation costs, as well as shipping facility such as ships and port. Indonesian coal export to European country may not to be much due to the distance in the shipping process, and the coal needed by European country is generally more than 5,000 calories of coal. Thank you very much for your attention. Wassalamualaikum warahmatullahi wabarakatuh. Saya kembalikan kepada moderator.
Terima kasih. Thank you very much, Prof. Irwandi Arif, for the very insightful informations. Yeah, singkat, very brief, short, but it's padat dan contain the important information that all the participants keen to know. Yeah. So according to Pak Irwandi, the opportunity is there, but there are some challenges for Indonesian suppliers to meet the requirement, especially in the quality and also on the geography, the shipping cost that will be higher. So we are going to see the development on this. By the way, we've been asked by media and how many Indonesians, how many companies that already supported to or exported to Europe, but we don't have the data. We only heard, some information. So maybe our friends from Argus or McCloskey, can give us more detailed information on this market. By the way, I would like to inform you in this occasion that Prof. Irwandi Arif is a very productive writer. He himself has launched a new book on Batubara, Batubara, New Era of Coal. Would you like to please 1 minute, 5 minutes to introduce your book, because this is a very important book for Indonesian coal. 1 minute.
Just to publish the New Era of Indonesian coal, because all the issue, global issue, such as energy transition, net zero emission, domestic market obligation, and added value of the coal, and clean coal technology, and etc. This global issue is very important to manage, manage and to control the coal production, and especially to meet the added value for the coal, but with we must make our retention from clean technology. Thank you very much, Pak Hendra.
Okay, thank you again, Pak Irwandi, for your great contribution to the Indonesian mining sector. Okay, so we move next to the second presenter of the today webinar, Mr. Freddy Starmos. He's a Vice President, Generation Fuels and Dry Bulks, Argus Media. He's based in the UK, and today he is going to present impact of Russia-Ukraine conflict on global coal supply and demand trend in the second semester. It's a very interesting topic indeed. So please, Pak Freddy, time is yours.
Thank you, Terima kasih, Pak Hendra, and thank you to everyone at Petromindo for inviting me to join this event. Thank you, Professor Irwandi, for setting the tone, I think, with a very insightful presentation. The topic that I've been given is quite broad. I'm going to try and focus in on a few sort of key issues, really, that I think are really important talking points. So yeah, just looking at the Russia-Ukraine impact and on global supply, trying to provide a little bit of context around that. So there's a few group notices. Just please bear this in mind before you reproduce any of the things that I'm about to say and broadcast. So yeah, I'll just in terms of the agenda for the next 15 or 20 minutes, I'd like to leave a little bit of time for Q&A. But by all means, if you have a question, please feel free to ask. Yeah, I'll be looking at coal prices in context globally. Obviously, the way in which trade flows and price spreads have changed as a consequence of what's happened with the Russian invasion of the Ukraine. We'll have a look at how long we expect, I guess, high CV supply constraints to remain in place, and therefore, I guess, that might give us an indication of how we expect high CV prices to perform in the coming months and between now and next year. I'll spend a little bit of time looking at some of the meteorological factors that we are looking at as Argus at the moment, and hopefully provide some concluding thoughts that will open up a discussion. So, just taking a bit of a step back, I guess, and looking at the market more broadly. We're obviously at a point in time now that we've never really experienced the in terms of pricing before. So you look at every major commodity, particularly within the generation fuels kind of set of assets, we're at or near record highs, and we've been bouncing around these record highs for a number of months now. Just breaking down the coal price spike for API2 over the past since the beginning of the year. Obviously, the end of February brought about a complete and utter sea change in terms of the way that people are thinking about coal price values, and we've been seeing the effects of that ever since. And I'll drill into the reasons for this as we go through the presentation. But I think it was important that at the very start to just kind of give an indication to the audience as to where we are now and just how unprecedented the price levels actually are. If you look at the chart on the right, there are some prices towards the bottom there, looking at US gas prices and Brent crude prices, which, bear in mind, Brent crude has been at or near record highs already, but the lines at the top show gas and coal prices, which, as you can see, that they're so high and they're so volatile that really it takes quite a lot of analysis to really drill into the longer term impact of what might come from now onwards. So in terms of the immediate impact of the Russia Ukraine, the aftermath of what happened in Ukraine in February, and the announcements that were made, the European buyers immediately looked to diversify away from Russia. Shortly after the invasion at the end of February, we know that in March there was anticipation amongst the European utilities that there would be some kind of limitation in terms of the amount of Russian coal that could be purchased. And sure enough, the embargo was announced, and it actually just came into effect about 2 weeks ago. So up until 2 weeks ago, we saw Russian coal continue to flow into Europe. As of the middle of August, there's been no Russian coal coming into Europe. So the impact in terms of the market has been for high CV prices to increase quite significantly as a consequence. Bear in mind that Russia was a major supplier to European utilities, and particularly for high CV coal. I'd estimate that upwards of 90% of higher CV, so 5,800 plus net CV coals were arriving into Europe from Russia. So it's left a very, very large shortfall. But consequently, it's actually caused Russian prices to drop quite dramatically versus other benchmarks as well. And I hope you can see that in the chart on the right of the slide, where the prices towards the top of that chart on the right hand side are for API2 and for the destination markets, but also the FOB markets where there's no limitations, and the prices towards the bottom are for the Russian FOB prices. So you've immediately seen this two-tier market being created. What's another point I think is worth raising, and I think one of my colleagues on the panel will probably cover this in more detail later, is the impact on the freight market, where we've seen as a consequence of the Russian the ban on Russian coal coming into Europe, the coal that's being sourced by European utilities, it has to achieve a higher ton mile. So, for example, replacing Russian coal with South African coal, replacing Russian coal with Colombian coal, puts a heavier strain on the freight fleet. In terms of our immediate outlook, and I'll just put this out there at the start. So for Russian exports this year, we expect them to be about 170 million tons of thermal coal. This is which is about 10 million tons down on last year, and we expect next year to be even less. This is largely down to the fact that the European customer base has disappeared. Also some, and consequently the fact that internally in Russia, coal has to be moved over longer distances in order to get to the destination markets. In terms of the overall view on supply side, supply side fundamentals in the market, I'll very quickly skim through these, but you can see that there's actually quite a mixed picture. So on the one hand, in Indonesia, on the top left there, obviously the export ban in January skewed things quite significantly, and really we see that the Indonesian suppliers have been playing catch up since then. We've actually bounced back up to very high levels of production and exports since then. Australian exports have been severely limited by weather-related issues in terms of flooding in eastern Australia. So while there's been a significant price spike, and I think that's been particularly the case for FOB Newcastle prices, we haven't really seen that kind of reaction in terms of supply that you perhaps expect when prices double or even triple. In terms of Russian exports, we're kind of in a bit of a range, but obviously the exports are going to different destinations now. South Africa has been very, very limited by domestic supply constraints, so bottlenecks in rail capacity, which has left South African exports at or near recent lows. Really, we don't expect any sort of major increases coming from there. In terms of Colombia, obviously that's been a kind of mainstay supplier into the Atlantic basin for a number of years now. There was a significant drop in 2020, I think, when Glencore closed its Prodeco operations. We haven't really seen the type of bounce back that you'd expect. There was some talk earlier this year about Prodeco coming back on stream and being able to sell into the market, but there's some question marks about that now. And I think the biggest surprise in all of this, when you think historically about how the US on the bottom right chart there has been the swing supplier in the Atlantic basin. Historically, whenever the API2 price has got up over a certain level, perhaps about $100 or so, you've seen this significant increase in US supplies coming into the market, which hasn't yet materialized, but we do think that there is some that should be coming into the market fairly soon. So in terms of the European ban on Russian coal, looking at it in a bit more detail and the impact that it's actually had from a pricing perspective, the API2 price has had to move to a significant premium to South Africa in order to attract South African high CV coal. So if you look at the chart on the right, the grey line is the API4, the benchmark for South Africa. The blue line is API2. On the left-hand side of the chart, you'll frequently see that the FOB price is actually higher than the DES, the API2 price. Whereas on the right-hand side of the chart, you'll see that I beg your pardon, so it's the other way around. So the grey line is the API2 price, which is now at a significant and sustained premium to the API4, and that's as European utilities look to replace the lost Russian high CV coal. They have to be able to price, the API2 has to be able to price in the API4 price. So South Africa could become a significant supplier of high CV coal into Europe from H2 onwards. Going from now, really, we've actually seen quite a significant increase in South African supplies into Europe over the past 4 or 5 months or so, really, since the crisis started. But there is limited scope for significant increases due to that rail capacity bottleneck that I mentioned. But the subsequent effects that we're seeing is this kind of dislodging of the high CV market versus the mid CV and lower CV markets as well. The European utilities are, their preference is to run on high CV coal. That's kind of what the boilers were built to do. This could leave a gap for some Indonesian suppliers, but there are, as Professor Irwandi said, there are logistical constraints on the amount of Indonesian coal that can move into Europe. So I mentioned about the mid and low CV markets and how detached they've become from the high CV market, which perhaps is the other way around. But when you focus on mid and low CV prices, I focused here on South Africa, but the same is really true for Indonesia. The values relative to the high CV benchmarks have collapsed. So the price chart on the right shows the differential prices, so that the spread effectively between 5.7, 5.5 and 4.8 grades of coal in South Africa relative to the API 4. So if you imagine that line where the 0 is the API 4, which is obviously moving around a lot, but everything trades relative to it, you can see that, really from the start of this year, we've seen extreme volatility. The first part in January and perhaps February as well was caused by the lack of mid and low CV Indonesian coal coming into the market as a result of the export ban. But since the mid-March onwards, we've seen the relative value of the mid and low CV coals collapse versus API 4, and that's largely due to this. In fact, I'd say it's almost exclusively to do with this issue with no Russian coal now flowing into Europe, and the subsequent need for European utilities to replace that high CV coal from Russia with high CV coal from South Africa. In terms of the other major thing, I guess, that we're looking at, which is obviously very, very closely related to coal, is the gas market, gas and LNG effectively. And I guess it's broken into two parts. On the one hand, you have the kind of liberalized, deregulated markets in Europe, and we've already seen a price chart looking at how the TTF benchmark has gone through the roof and remains at extremely elevated levels. In the kind of, I guess, the Northeast Asian part of the market, really the focus is on LNG and the fuel switching levels that you would need to see effectively to see gas as competitive versus coal. What I'm trying to show with this chart really is the difference between the long-term oil-linked LNG price in Japan, which is that black line that runs right through the middle there, and the spot LNG price, which is that blue line at the top there, which is kind of zigzagging around, and then the levels at which gas would have to be in order to compete with coal. So you must bear in mind that while we're seeing extremely high coal prices, on a relative basis, from a power generation point of view, coal is still cheap versus gas, which I'm sure a lot of the suppliers in the room will be delighted to hear. But even though we're at record high levels for coal, gas is much more expensive in order to generate electricity, and I hope you can see that through this chart, where effectively, so the spot LNG price, the zigzaggy line at the top there, would have to be in the middle of that chart in order for gas to be cheap enough to compete with coal, or alternatively, the coal price would have to rise significantly from where it is now in order to excuse me, in order for there to be coal to gas switching in Asia, in Japan specifically. Sorry. So the tight gas market conditions, we expect them to persist in the midterm. There's not very much LNG capacity expected to come online. There are restocking requirements not just now for winter, but also for summer 2022. Europe is much more reliant on gas and LNG imports, particularly in the wake of domestic production falling. And there's a lot of uncertainty over the pace of renewables, the renewables build out. I think that's it's more evident now in Europe than it ever has been before. We don't expect Nord Stream 2 to come online, and even if it did, we don't think it would necessarily be a good thing in terms of taming the volatility, particularly with how we've seen flows from Nord Stream 1 over the past few months. And I think one of the key issues affecting the European electricity market this winter, particularly, is the availability of French nuclear capacity going over the coming months. So what we have seen, though, in the immediate wake of the shock that came in February and March, and as European utilities began to digest what was happening in terms of coal supplies, was that immediate rush to the market in March, April, and May has now paid dividends in terms of the amount of stock that's available at ARA, which is Amsterdam, Rotterdam, and Antwerp. I beg your pardon. So we've seen a significant build in inventories over the past few months, leading into winter. But at the same time, a lot of this stock build has come from existing contracts for Russian coal, which have now obviously disappeared and elapsed. There will be no Russian coal coming in from now on. So this poses the question as to, you know, fundamentally, you know, how much coal will be kind of moving on to stockpile in the coming months. Naturally, being winter, you would expect, you know, stockpiles to fall. There are some limitations on that because of there's an ongoing drought in Europe, which is restricting the amount of coal that can actually flow from the Arra stocks into you know, upstream into Germany. But at the same time, yeah, the stock level is healthy at the moment, but how long will that remain the case with no fresh Russian coal coming in? Let's move on to the next slide. So there's it's a similar chart that I've drawn here, really looking at the coal to gas competition in Europe, where the previous one was looking at LNG to coal competition in Japan. And hopefully, again, you can see that, you know, the line at the top, the black zigzaggy line, that's the TTF price, which is like the kind of benchmark for gas price for Europe, which is way above the level that it would need to be in order to compete with you know, even the most efficient gas plant to begin to compete with the coal price. So, you know, again, just, you know, sorry for repeating myself, but even though the coal price is historically at a very, very high level, it's still cheap versus gas. You know, the profit margins that are available to coal-fired generators now, or, you know, looking forward to the winter, so Q4 and Q1, are astronomical. They're so far above any level that we've ever seen in the past, and it's been sustained for such a long period of time that it's still relatively cheap to burn coal, to generate electricity. Certainly relative to gas. It's not to say that it's cheap for the consumer, like me, sat at home trying to keep my lights on and you know, keep warm. But at the same time, you know, the market is indicating that there will be very, very strong coal burn amongst the European utilities this winter. There are a few kind of compounding reasons as well. You know, there's a nuclear phase out underway in Germany. There is a discussion, you know, politically in Germany at the moment over the timing of this, and it looks, I guess, you know, reasonably likely that this will be postponed, given that there's, you know, this major issue with supplying electricity this coming winter. But at the same time, you know, the story is very bullish. It couldn't really be more bullish. You couldn't. In fact, it's very, very unlikely that you could take a set of factors and align them in a more bullish way than we currently have in the in the coal market. And added to that, and I mentioned about the meteorological kind of outlook, we're looking at our third successive La Nina event on an annualized basis, and this is, you know, really a very, very bullish story for coal. You know, we saw La Nina events over the last 2 or 3 years, and they just seem to be kind of getting a bit more extreme, where you've got you know, cold weather in some of the major demand hubs. So very dry weather in Europe as well, which is leading to a drought. You've got wet weather in Indonesia, which is affecting the miners. And you've got very wet weather in Eastern Australia as well, which is affecting the, you know, production capacity there. So, you know, taken together, alongside the underlying market fundamentals, when you consider that, you know, we're looking at another La Nina event over this coming winter and into next year, the outlook is very, very bullish. So some of the key takeaways, I guess, you know, we should expect, based on current prices, for some coal supply constraints to ease, but there are some very, you know, structural factors in place, such as in South Africa and Colombia. Forward prices, the Russian embargo, they all point to very firm European coal demand, and we expect a very tight gas market continuing through the end of this year and into next year, and this will support obviously the gas price, but also the coal price. We'd expect continued price volatility, given that, you know, there is uncertainty over gas and LNG supply, and this third straight La Nina winter that we're looking at now. And we expect Russian exports to dip post-August, but at the same time, we're seeing, you know, much higher flows into China, India, and Turkey as they're able to discount against the prevailing market price. in terms of the European import outlook, we do see, and just to reiterate a few points really, because I think they're very, very important. But we do see as a consequence of coal to gas competitiveness and the fact that coal, like I said, is very competitive versus gas. We expect strong coal demand. The nuclear issues in France are really, causing a very elevated power price, which allows the dark spread to be so healthy and so attractive to generators. But we expect some compensation of the shortfall of Russian supply from South Africa. I think the US could step in the coming months. Colombia and some Indonesian, although perhaps not so much. There are serious questions being asked about supply availability and the ability of European generators to actually keep the lights on this winter. But in summary, I think the API2 price will remain high to attract coal from non-Russian origins, since coal does remain cheap versus gas in Europe. And there's a little bit of an outlook chart there just to give our view over the next sort of 6 to 7 months or so, I guess, of the fact that obviously Russian coal, which is the red bars at the bottom, will drop to zero. We expect that to be made up by a combination of US, a bit more South African, a bit more Colombian, hopefully potentially a bit more if Prodeco does come back online. A little bit more from Australia, which we've already seen over the past few months actually, to compensate. But you'll notice that the absolute levels of the bit at the very top is very high compared to recent years, and that just reflects the fact that coal demand will remain strong.
Excuse me, sir. So last.
Yeah. So this is my last slide. I just want to say, terima kasih. Thank you everyone for listening, and thank you to Petromindo again for organising this event. I think it's a very important time for us all to be discussing the market. So Pak Hendra, back to you. Thank you.
Thank you very much, Mr. Freddy Steinmos, Vice President, Generation, Fuel and Dry Bulks of Argus Media based in the UK. Thank you. It's a very interesting and very insightful presentation. So you covered a very important idea that people have been wondering, what is the impact of for instance, Russia discounted Russia coal price to Indonesians, high CV, mid CV, and low CV, and so on. So also some of the key giveaways that you mentioned, the tight gas supply will support the demand from coal at least until the first half of the 2023. So thank you very much. We'll get back to you later on the Q&A sessions. So ladies and gentlemen, participants of the webinar, so don't forget to fill in the questionnaire in the chat column. That, as Desi mentioned earlier, there will be 5 vouchers, 5 door prizes presented by the sponsor of today's webinar, one of the sponsors of the day webinars, Lintas Arta. So please fill in the questionnaire, and before the end of the webinar, the winner will be announced. Okay, the next presenter today, Pak Jimmy Deng, is General Manager of Ten-Free Community Solution. He's been in Indonesia for quite some time. He knows very well Indonesia's coal supply overview, and also from China. It's of course because Pak Jimmy Deng is from Shanghai, and the presentation today, the prospect of coal import from China, and the second matter, what does it mean for Indonesians coal miners? So, Pak Jimmy, there are a lot of questions about the China market today. We have heard that the China government has ramped up the productions, but on the other hand, the slowing economy, especially due to the COVID-19 zero COVID policy and the rise of the inflations, the week of consumer price index, purchasing managers index, it may affect the coal import, and there are some worries that whether the China will curb the import or limiting the import quota. So there are a lot of questions about China, and also the discounted Russia coal price, then mostly goes to China. So we are going to listen to your perspective on this, Pak Jimmy Deng. Your time, 20 minutes, but if you can do it earlier, that will be better. Thank you, Pak Jimmy. Silakan, Pak.
Okay, thank you, Pak Hendra, for the introduction. And thanks, Petromindo, for having me in this event. And thanks for the introduction, dear distinguished speakers, audience. Good afternoon. It's been an honor to hear today. As I'm going to share some of our opinion on the market from a Chinese perspective. Let me open the my power. Okay. Okay. So just a brief introduction about CCS. CCS has been very active in coal trading, and China is our base market, and we are very active in opening the overseas market in recent years. If you have any coal want to buy or you want to sell, CCS will be a good partner. Just a short advertisement. So let's back to the topic itself. Today, my sharing cover 5 parts. The first one is on the Chinese economy in first half, and the coal and the electricity output in first half, and also the import coal, especially from Russia and Indonesia, and also the price arbitrage between the import coal and domestic coal. And the last part is about the outlook in the first half of 2022. So Chinese economy, as Hendra just introduced, Chinese economy is slowing down because of the zero COVID policy. As you can see from this one, in first half, the GDP growth was only 2.5%. And it's slowing down because in previous years, the GDP growth was around like 6 or sometimes 8%. And in Q2, especially in Q2, the GDP growth was only 0.4%, which is very, very low. This is a result of the lockdown from March to May because of the COVID outbreak again. And also the import and export, even it's like 10% increase compared to same period of last year, but it's still very relatively low compared to previous years. The growth rate, and also the sales of consumer goods in domestic China was decreased by 0.2%, which is also a result of the lockdown in Q2. And also the investment. The investment in first half increased by 5.7%, but this is the lowest one after the COVID been cracked down in China. And also the second part is about the output of the coal and electricity. As you can see, Hendra also mentioned, in first half, China produced around 2.56 billion tons of coal, which is a 11.5% increase from the same period of last year. That's a really huge increase in previous years. But the electricity production was only increased 1.5%, and especially the electricity from coal-fired generation decreased by 2.5%, and the electricity from hydro or from new renewable energy increased very significantly, which give more pressure on the coal consumption as well. And this is the monthly production of the monthly coal production in China and the import coal to China. As you can see, this year every month mostly the production is higher than previous years. The Chinese coal production in domestic China in first half increased 11.5%, and in June itself increased by 16%. That's a very significant growth. As we say, the production increase and the consumption of the coal, especially coal-fired generation, decreased. That's why give less room for the import coal. That's why in the first half, China imported only 100 around 140 million tons of coal, but this number is a big number, but it decreased over almost by 20% from same period of last year, especially in July. In July, it decreased more than 20% to 21.8% decrease from the same period of last year. So this, we can feel the pressure on the coal from Chinese market. These are the main regions of coal import to China. Basically, Indonesia is the biggest coal exporter to China, followed by Russia and Mongolia and other countries. So we only focus on Indonesia and Russia. Indonesia in first half export around like 53.4 million tons to China, which is around like 16% decrease by from last year, and especially in June itself. By June, in June it's like a 32.6% decrease from same period last year, from last June. So this is also very significant decrease from last year, and also from Russia. Maybe it's like people's impression is like after the conflict between Russia and Ukraine, more coal will be sent to China, but in reality, it's not. Only in the first half, only 21.7 million tons of coal export to China from Russia, which is around 9% decrease by same period of last year, and in June itself decreased by 20% from last June. And this we're going to analyze why China import less coal. One is because of the demand. The demand was the demand of coal itself also going down, and also domestic coal price. Domestic coal production also ramped up. This is the main reason for China import less coal, and the root reason is because of the price. So the red line here stands for the price cap for the NR55, which is 1,155, and the dot line is the price of CIF NR47 NAR from Indonesia, CIF to China, convert to an NR55. As you can, and also the green line stands for the price converted to NR55 from NR38. As you can see, this one in Q1 from January to end of February, the import coal price still competitive compared to domestic coal price. But after the outbreak of the war the Indonesian coal price going up, but the domestic coal price, the price cap still there, makes the Indonesian coal less competitive to Chinese coal, Chinese domestic coal. That's why starting from March, which we can and Q2, Chinese import coal from Indonesia decreased very significantly. And recently, let's say in August, the price gradually going back. The price of Indonesian coal convert to China it becomes competitive again. That's why recently, I think the many audience at the miners, you can see us recently a lot of inquiries from China show up again. This is the main reason. And also from Q2, Q3, most of the mid CV from Indonesia cannot compete against the Chinese domestic coal. That's why from Q2 and Q3, mostly there's no mid CV coal from China from Indonesia to China. Mostly the lower CV, NR38 or even lower, NR34, even NR3000. These are the current situation. So they come to an end. So the first is the Chinese economy slowing down is because of the zero COVID policy, and the Chinese coal production ramped up by 11.5%, while coal-fired generation shrank by 2.5%, resulting in the decrease of the import coal volume. And despite of the huge discount from Russian coal, China still shows less appetite to Russian coal because of the Chinese domestic coal price still relatively cheaper. And also Indonesian coal price surged after the conflict and resulting less interest from Chinese buyers. And in the next second half of this year, we can see the import coal from China will be fall by 20 to 25% in the whole year, which is around like 250 to 270 millions in total in the whole year. So that's all for my presentation. Thank you. Thank you for your time.
Thank you very much, Pak Jimmy Deng, for the very insightful information, especially about the China coal market. There are a lot of important information that you just presented. Yeah, overall the projection of the China import will be lower today. This year is 20 to 25% due to the slowing down of the China economy, and also the interestingly on the point 3, despite the the discounted Russia coal price, the China buyers show a little less interest on the Russia coal, Russia discounted coal price. So thank you for Pak Jimmy. We'll get back to you later in the Q&A sessions. Okay, after we listen presentation on the China perspective on the impact of the Russia and Ukraine conflict, the global seaborne market impact to the Indonesian miners, we are going to listen to the perspective from Indian market, the changing of the Indian demand on coal and the implication to the Indonesian supply. It will be presented by Mr. Dhruv Deer. He is a senior research analyst of Indian coal market for McCloskey. It's based in India. So, Mr. Deer, your time is, if you can deliver your presentations, it's 15 minutes. That will be better. Okay, please. Thank you.
Well, thank you, Pahendra, for a quick introduction. And thank you, Petromindo, for having me here to present our views on the changing Indian demand and its implications on the Indonesian supply. As mentioned, my name is Dhruv and I work as a senior analyst for covering the Indian market for McCloskey by Opus, a Dow Jones company. Let me start by sharing my presentation. Just a minute. Show all of those. Sorry for the delay. Yep. Is my screen visible? I hope it is. So I'll just continue. I hope you can see my screen.
Yes, but it's clear.
Okay, perfect. Yes. So Mr. Freddy covered the impacts of the Russia-Ukraine conflict very well. However, I just like to start with that, covering the Indian aspect and what are the implications for India. So this chart shows the Russian thermal coal exports of 2021, and the bars in red show the expected decline in trade flows, whereas green shows the expected increase. So with the ban coming into force that came into force on August 10th, we expect trade flows coming out of Europe, and then followed by that trade flows, Russian coal flowing out of the JKT side, that is Japan, Korea, and Taiwan. Even though the Russian volumes, the European volumes are expected to decline significantly, the decline in the JKT region is expected to come over the next 5 years. And the volumes are expected to increase primarily in Turkey and the Mediterranean region, followed by China, India, and Southeast Asia as well. Well, coming to the flows, we expect coal flows going from Australia, South Africa, Colombia, United States, as well as Indonesia to Europe, and a major decline coming out of South African flows from India that will be prioritized to Europe. Going forward, I would like to just give a brief introduction about what the trends have been in the Indian market for the past 1 year. And then we'll be moving on to the demand side and then the supply side. So in Q3 2021, that's last year, the coal demand increased as the second wave of the COVID-19 infections passed by and the economy started to open. Now, with the increased coal demand from the power sector as well as the industrial sector, the increased demand primarily from the power sector pushed India into a supply crunch in Q4 2021. And there was a shortage of coal, which was primarily due to the challenges in coal logistics in India. Now, when India Power moved through that, it was anticipated that the demand for coal is again going to increase in the second half of this year or in the second quarter of 2022 with the increasing summer demand. Then in February, with Russia's invasion of Ukraine, trade flows started to change, were expected to change, and had a major impact on prices, keeping the Indian buyers out of the seaborne market. However, in Q2 2022, primarily because of the heat wave and the increased power demand, we saw Indian buyers coming back to the seaborne market looking for coal, secure supplies for coal. And this was pushed by the Indian government's mandate to import coal to blend 10% with the domestic supply in order to have healthy stocks in the country for power plants. Now, moving to demand, I would like to start with the industrial demand, which caters a very small percentage to the total coal demand, and then move on to the major demand sector, that's power generation. So, Indian economy grew at around 8.7% in 2021 and is expected to grow around 6 to 7% per year for the rest of the decade. India aims to double its steelmaking capacity, steel production capacity to 300 million tons by 2030. And sponge iron is a raw material that is used for steel making through the electric arc furnace and the induction furnace route. Now, both these routes contribute to around 56% of the total steel production as of now, and are expected to stay at the similar levels going forward. Therefore, we have sponge iron production increasing at a rate of about 3% per annum till 2030, thereby increasing coal demand from the sector. However, for sponge iron, the industry primarily relies on South African 5,5 material for its high carbon content and has very little or almost negligible demand for Indonesian coal. Well, now moving to the cement sector, with the government policies that are now in place to develop further infrastructure in India, the government has laid out 200,000 Indian rupees for the development of road transport and highway in India that in the 2022 and 2023 financial year budget. And also with the increasing demand of affordable housing in tier 2 and tier 3 cities, we expect the cement production to grow and the cement demand to grow with it. So we expect the cement production to increase at a rate of around 6% per annum till 2030, thereby increasing coal demand from cement. However, cement industry in India has this option to switch between thermal coal and pet coke. And with the current high price market, the cement industry is primarily focusing on pet coke, relying on pet coke for its energy needs. Again, impacting very little on Indonesia. However, now moving to the power generation sector. Well, India's utility scale capacity, power generation capacity is around 404 gigawatts, out of which 211 gigawatts are coal-fired. And as you can see, in the initial half of the past decade, there was a rapid expansion in coal-fired capacity in India that led to a decline in the plant load factors of Indian coal plants. However, with the increasing power demand that we are seeing right now, the trend is now reversing. We are seeing the plant load factors increasing and coming back to almost the levels that they were a decade ago. India has added around 28.6 million consumers in the past 1.5 years, thereby increasing the power demand for the country. And even though the coal-fired capacity makes up 50% in the capacity basket, it contributes to 70% of power generation, total power generation in India. So with the increasing demand for power, we expect coal-fired generation to increase at a CAGR of around 3% per annum till 2030. And in the past few months, despite of the high seaborne prices, we have seen Indian buyers coming out in the seaborne market and seeking supplies. Now that has primarily been because of the Indian government's the regulation that the Indian government allowed, wherein it allowed power generators to pass on the increased cost of generation to its consumers. Now this hasn't happened earlier, and this is something that's going to change the market going forward. And how this works is basically the generation companies reach out to the Central Electricity Regulatory Authority with a petition to increase the tariff. And once the CERC approves, they notify the distribution companies of the price hike, and then the distribution companies file a petition with their respective state electricity regulatory authorities to pass on these prices to the consumers. Now, if allowed, these prices are passed on to the consumers. If not, the discoms have to bear this at an expense on their own. Now, there's also an option where the state government usually subsidizes this, but if not, then they allow it to either be borne by the discom or passed through by to the consumers. Now, in the past few months, around 25 states and union territories have allowed pass-through of increased prices to end consumers. That's the reason the demand for imported coal, despite the high prices, has shot up in India in the recent months. Moving to the flow of Russian coal in the Indian sector, coal demand sector. We have seen in the past few months sponge iron industry testing Russian coal, and they have come up with positive results. And we expect that going forward, this could actually replace their demand for high CV or mid CV South African coal, and they can utilize Russian coal instead for making of sponge iron. However, in case of power generation, the Russian coal comes with numerous challenges. The coal specifications that you can see on the table right-hand side, the major issue that Russian coal comes with is that in power generation, before the coal is fed into the boilers, it goes through a grinding mill where it's pulverized. The mills in India are designed to crush softer coals that are Indonesian as well as Indian domestic coals. However, the Russian coal is relatively hard. It has a very high hard groove grindability index. Therefore, it is difficult for the Indian mills to pulverize that coal before injecting it into the boilers at power plants. And apart from that, the Indian power plants, the main factor that they consider before utilizing a specific coal is the fixed carbon to volatile matter ratio. Now, after talking to a lot of people from Tata Power, Adani, as well as NTPC, I found out that the ratio that Indian plants basically work on is around 0.8 to 1, whereas the Russian coal has this ratio of around 2.7%. So this will actually impact combustion in the boiler. It will have more carbon, therefore it will cause further issues. It will cause improper combustion. Higher carbon content will cause improper combustion and further issue it as disposal. So as of now, we do not expect Russian flows to displace Indonesian coal demand in India, that is primarily for power generation. However, with the case of NTPC, the government, the NTPC has some of the boilers that have Russian technology, but they also see that without government intervention, switching to Russian coal for blending with domestic coal is something that is still not been thought of. Now, coming to the coal demand for India, so 85% of the total demand, coal demand in India comes from the power sector, whereas 4% each comes from cement as well as the sponge iron sector, with the rest coming from the other sectors such as brickmaking, textile, etc. With the growing economy, we expect the coal demand to grow at a rate of around 4% per annum going forward till 2030. Now, moving on to the supply, domestic coal production has improved in the domestic coal production makes up around 80% of the total supply, coal supply in India, with a major contribution coming in from Coal India Limited, that's a public-owned, government-owned company. Coal production from Coal India has increased by around 13% in the first half of 2022 as compared to the previous year. And we expect the entire domestic supply to increase by roughly 15% in 2022. And with the growing growing demand for coal, the increase in as till June of 2022, the increase in production from Coal India is, despite of being 13% in terms of volumes, has been around 40 million tons. Whereas we see an increased supply from captive mines, as later last year, the government came up with a mandate allowing captive mine owners to sell excess coal in the open market after meeting the captive requirements, thereby boosting the production from the captive mines. Going forward with the government's plans and the ongoing options in tranches for commercial mining, with those mines coming online, we see the share of captive mines and the auction mines in total supply increasing going forward. Now, talking a little bit about the current supply situation and the stocks situation in the Indian market. Well, Coal India, the pitted stocks in India have bounced back with the ramped up production from Coal India, and which is trying to meet the increased demand for coal. Now, comparing the stocks are still less as compared to on a year-on-year basis, but comparing it with the Q1 or Q2 of 2021 won't be justified, as because of the subdued demand and the pandemic, coal stocks, pitted stocks reached record highs of around 100 million tons. Whereas with the increased demand, they have been declining for the rest of the year 2021, and with CIL's effort, primarily CIL's effort to increase production, are now bouncing back. Same is the case for port stocks. Thermal coal port stocks have been declining with increased demand, increased consumption. However, they have bounced back in Q2 2022 with increased demand for imported coal. However, this can also be attributed to lesser coal demand from the power sector, as we see high hydro generation and renewable generation due to change in seasonality. Therefore, lower coal-fired generation demand in the power supply bucket. Now, moving to the power plant coal stocks, stocks have improved have also bounced back. Power plant stocks have bounced back, however, are still low as compared to the previous year. They are short by around 22%. We see that imported stocks have increased with buyers coming back in the market. However, we feel that stocks are still going to be low, but decent enough for India to pass through the monsoon season, as coal demand would be less, coal-fired generation would be less due to the seasonality.
Excuse me, sir. 2 minutes, sir. Your time.
Yeah, sure. I'll be just wrapping up, just a couple of slides. Moving on to imports. Well, we see with the increasing economy, we see that the growth in export, the demand for imported coal is going to increase. We expect it to grow by around 2% per annum to reach 185 million tons by 2030. With with supply from Indonesia making up around 65% of the total import basket, followed by 18% from South Africa, and 14 to 12% from Australia. Now, for the rest of the year, we feel that with the current market situation, the increase in Russian supply is expected to displace South African material, as the demand primarily comes for Russian coal is primarily coming from the sponge iron sector instead of power. So we expect the Indonesian coal's supply to be unchanged or to at least grow in the years to come. Well, now coming over to discussing a little bit about the prices. So the FOB prices for API 4 and M42 have obviously increased with the changing trade flows and the increase in demand for coal. You can see you can see a major spike in API 4 prices that is primarily due to the incoming demand from Europe for higher CV coal, and we expect the prices to be high for the next couple of years before cooling down by 2025. So that will be all from my side. Thank you so much.
Thank you very much, Mr. Dhruv.
Thank you. Back to you, Pakendra.
Yeah, thank you very much, Mr. Dhruv Dhir, Senior Research Analyst of Indian Coal Market for McCloskey. Is based in India for the very insightful information on the Indian perspective on the impact of the Russian of Ukraine conflict to the Indonesian miners. So basically, despite the discounted coal or Russian coal, Indonesian still has it's likely unchanged. Yeah, the Indonesians portion for the Indian power plant demand. Thank you very much. We will get back to you later on the Q&A sessions. Okay, so distinguished participants of this webinar, don't forget to fill in the questionnaire because 5 lucky winners will receive the digital wallet from Lintas Arta, the sponsor of today's webinar. Okay, we'll now move to Mr. Jive. We are going to listen to the analysis, the perspective from the Institute for Energy Economics and Financial Analysis, IEFEA. It's always interesting to listen the perspective of the institutes. This webinar, Mr. Jive will deliver presentation on outlook of coal market in South Asia, particularly Bangladesh and Pakistan. So, Mr. Jive, please, time is yours.
Thank you, Mahendra, as always. Let me share the screen and let me go from there. Okay. Can everybody see the screen, Mahendra?
Yes, it's clear.
Thank you so much, Mahendra. Let me just get the slideshow going. Hi, this is Guy here. I represent IEFA. We are a non-profit. Think tank on the energy transition, and we look at obviously the transition from fossils to renewables, and we have a slightly different perspective from some of our distinguished speakers today. So let's talk about Bangladesh and Pakistan. Now moving on, let's talk a little bit about the global coal market, and thank you, Professor Arif, and definitely thank you, Dhruv. And Freddie as well. A lot of the message here is in line with everybody else. Cyclical high coal prices are likely to persist. And notice Dhruv said it's going to be until 2025. I just want to tell you, 2025 is a long time away. 2025 is a long time away. So that's great. The Newcastle price has doubled effectively. Russia supplies 18% of the world's coal. And this obviously is going to be disruption in every sense of the word, shipping and sourcing, buying, etc., etc. Okay, moving on from there. Okay, so what does this mean for Indonesia specifically? Well, Russia supplies 13 to 18% of Japan, Korea, and Taiwan. Indonesia has 9 to 24%. India, Russia less so, Indonesia more. But I think what's important is that North Asia has committed to taking less Russian coal. And there's an opportunity for Indonesia to obviously fill in the gap when it can. But this is also quite interesting because of the shipping distances, right? Russia is only 4 to 7 days away from Korea, Taiwan, and Japan. And Indonesia is 1 to 2 weeks away, and Australia even more so. So from India's perspective, it's 24 days to Russia and 13 days to Indonesia. So therefore, when you think about it, you've got ships going the wrong way, right? So ships sailing past Japan, Taiwan, and heading towards India, and ships sailing from Indonesia up north. It's a very messy situation. And what's going to happen is you're going to have ships staying on sea for a longer time. And this is the map here, and you can see on the map, this is what we mean, right? You've got ships going the wrong way. So you've got ships going further to deliver coal to users, but at the wrong place. Okay, now let's look at the map again. Yeah, so that's my point. There will be disruptions. There will be disruptions, and what's going to happen is it's going to keep coal markets very tight. That's why when Dhruv said 25 days, I mean 2025, it's kind of realistic, and 2 years is a long time. Hang on, 2.5 years is a long time. Okay, moving on from there. Bangladesh. Well, Bangladesh was 5 gigawatt hours last financial year, and right now utilization is about 32%. ITMG sells 1.2 million tons. Just now, Professor Arif said that Bangladesh bought about 2.7 million tons.
Sorry, Guy, can you hear me? The slides aren't moving. We're still on the first slide. Sorry.
Oh my goodness, this is the second time it's happened. I'm going to stop sharing. Dianto, can you show the slides from your side, please? Because this has happened before. I'm so sorry.
Okay, Pak. Okay, Pak. Oh, okay.
Dianto, I'm so sorry. Thank you, Freddie. Thanks for that. Because it's happened before, even though it didn't happen on the demo just now. So, Dianto, could you just put up the slides, please?
Pagi. Yeah.
Thank you, Pa. Thank you so much. Let's move on to page 1, please. Thank you, Pa. Okay, and then let's move on to page 2. Okay, yes, right, guys. Just now we were just talking about that. Coal price has doubled, right? And what I'm saying is in line with all our other presenters. You know, thank you, Freddie. Thank you, Professor Arif, and then thank you, Dhruv. So Russia supplies 18% of the world's global thermal coal market, and there's disruption in shipping routes. Thank you, Pa. Thank you, Pa Dianto. Next page, please. Yes, and Russia accounted for 13 to 18% of Japan, Korea, and Taiwan coal imports. Indonesia 9 to 24. Russia 3% of India. Indonesia 48%. But what's interesting is the disruption, because when any market removes 15% of their supply, there's going to be a very messy transition. Thank you, Pa. Next page, please. So what happens if we talk about shipping days, right? Russia is 4 to 7 days away from North Asia. Indonesia is 1 to 2 weeks away, right? So you've got ships coming from Indonesia and ships from Russia sailing past North Asia. For India's case, if India's buying from Russia, it's 24 days, and it's only 2 weeks for Indonesia. So basically, there will be disruptions because you got ships going the wrong way, right? Next page, please, Pa. Right, and this map says it all. I think this map says it all. This map just tells you that you've got ships sailing longer distances to go to India, longer distances to go from Australia and Indonesia to North Asia, and then you've got ships sailing past these close locations to further afield. So basically, it's a mess, right? And this is going to add 8 to 26 days on 8 to 17 million tons of thermal coal trade a year. Panamax is only 80,000 tons. You can just imagine you've got easily 50 or more ships on the water going the wrong way, okay? And this is going to help markets very tight. And Dhruv is right, 2025, 2.5 years. Next, please. Thank you, Pa. Yeah, Bangladesh. Next, please. Thank you. Right, so Bangladesh did 5 gigawatts in 2021 fiscal year, and this is obviously more than 3 gigawatts a year before. And coal capacity is 1.7 gigawatts in Bangladesh. ITMG sold 1.2 million tons to Bangladesh, and just like Professor Arif said, Bangladesh accounted for 2.7 million tons, and Pakistan 2.5. We'll talk about Pakistan afterwards. Next page, please, Pa. Okay, so this is the master plan for Bangladesh power supply. It's a bit out of date because it was revisited 4 years ago. The new one's only going to be available next year. but I just want to give everybody a heads up. So it's 1.8 gigawatts of capacity right now and 6.7 in progress. And you're looking at an average of about 2.2, 2.5 million tons of coal for every gigawatt hour of demand. Moving on. Thank you, Pak. Thank you, Pak. So right now, what's interesting is that there's 8.4 gigawatts planned, but it's looking kind of unlikely. Phase 2 of Matahari was 1.2 gigawatts. That's off right now. They're going to try to replace it with an LNG plant, but that's also tricky because LNG prices are pretty insane. And as Freddie has already said, coal is a lot cheaper than LNG. But the cost of actually building a coal plant in 2022 is a lot more expensive than it was, say, 2015. So therefore, there's some logic there. 10 plants were canceled at COP26 last year. They announced it. Right now, the previous demand base was about 36.5 million tons, but this could only be 26 million tons after all the cancellations. So there's a net decrease about 10.5, right? Indonesia has about 5 million tons into this market, so there's some opportunity there. Thank you. Thank you, Pak. Move on to Pakistan. Thank you, Pak. Next page, please. Yep, Pakistan total power generation. Hydro is number 1, LNG is number 2, coal is number 3. Right now, we estimate that Pakistan has about 4 gigawatts of coal power capacity right now. Pakistan has a slightly different challenge for Indonesian coal exporters. Thank you, Pak. Can we move on to the next slide? Right now, there's a master plan for Pakistan as well. But what's interesting about Pakistan is that they will be looking to replace some of it with actually local coal capacity, right? So, and they're also moving towards renewables. So by 2030, they're looking at 8.6 gigawatts of coal, 8 gigawatts of solar, and 5 gigawatts of wind, right? And about 5 gigawatts is actually from imported coal, and the remaining will be from domestic coal. That's assuming the coal mines go ahead. Thank you, Pak. Let's move on to the next slide. So the coal plant pipeline is right now Pakistan imports most from South Africa, but as Freddie has already said, right now a lot of South African coal will be heading into Europe, so there's some opportunity there. Rising cost of fossil fuels is also a problem for the Pakistan government. I mean, oil, LNG, and coal, nothing's cheap relative to last year even, right? So that's going to be a problem the government has to consider. Some of the existing 4 gigawatts import capacity may be converted to domestic coal, and a previous one has been converted to solar already. So the demand base is about 12 million tons for Pakistan, and that's the opportunity for Indonesia. Thank you, Pak. Next one, last slide. So in conclusion, coal plants are being cancelled. Bangladesh has knocked off, maybe 6 gigawatts. Pakistan has cancelled 2.3 gigawatts. They're going to put 1 more gigawatt domestic coal. So to summarize, there's a demand base of 26 million tons for Bangladesh for imported coal. There's a consumption base of 12 million tons for Pakistan for consumption coal as well. So there will be a short-term adjustment during the northern winter, and we'll see how things play out. But right now, the two numbers are 26 and 12, so there's 38 million tons for these two markets. Thank you, Pak. That's the end of my presentation. Thank you.
Thank you, Pak GP, for the very insightful information presentations on the outlook of coal market, not only in South Asia, Bangladesh and Pakistan in particular, but also you cover a little bit about the impact of the Russia-Ukraine conflict to the Indonesians coal mines. And I like the chart that you mentioned about the shipping impact to the logistic market, and also the distance problem, the challenges that may affect the flow of Russian shipments to India and also to China, and also from Australia to India and Indonesia to India. Thank you very much for the presentation, Mr. Jive from IAPA. Okay, the last but not least, Pak Ramli Ahmad from Ombilin Energy. He's been in the industry for more than 2 decades, I guess. So he's an expert on the coal market, and I'd like to listen to Pak Ramli perspective from the Indonesian trader, seeing the rebalancing or maybe the new configurations of the seaborne coal markets as the impact of the global geopolitical dynamism. So, Pak Ramli, the time is yours. Thank you.
Yes. Good afternoon, Pak Hendra. Thank you to Petromindo for giving me this chance to talk about the coal situation in the current coal situation. As far as we are concerned, as a coal trader and producer of 3,800 GAR, so far we have had very good demand and very good inquiry coming from China and as well as India. But a majority of our shipments, I will say something like 90% of our shipments are all mainly going to China. Of late, the current market situation is that we all know that there is a heat wave in China. The hydros are not working very well. In the last few days, we have had a lot of inquiries from China because they are looking for 3.8 GAR, 4.2 GAR on a very aggressive manner. Besides that, I think this is only a temporary measure, because I don't think this hot spell in China is going to go on for very long. Meanwhile, from India, after this monsoon, we are also getting a number of inquiries for India. In the long run, I must say that at least until the end of this year, as far as low CV coal is concerned, the demand will still be very strong. I do not expect price to be to come down a lot. In fact, I foresee that ICI3 may be rebounding today, but we have yet to see. I think overall, the Russian war has definitely caused a lot of issues, a lot of problems for everybody. You know, it's upsetting trade flows, it's upsetting freight rates. But of late, we are seeing even Supramax rates is coming down. It's come down by quite a bit. So things like the situation is changing. In Indonesia, for mid and high CV coal, yes, the demand has dwindled by quite a bit, such that I think many mid to high CVs coal is quite readily available from mid-size miners, yeah, because other than the big guys who have long-term contracts, usually you might be able to squeeze a few vessels from the smaller traders, and that is what actually can be done. But offers that they are getting for the mid to high CVs are way below index prices, as much as 2-digit discounts that we are talking about. So yeah, that's what I like to say for the local trades. I've not heard anything from the other markets like Philippines, or I think Vietnam is still quite consistent. They have a constant demand for coal, but not much changes as I see it. Because I think Vietnam, I'm not sure, maybe one of you can tell me if Vietnam do buy Russian coal. You know, is Russian coal going into Vietnam as well? Yeah, that's basically the market outlook.
Okay, thank you, Pak Ramli Ahmad, for your perspective. I will get back to you in the Q&A session. So, distinguished participants, we have listened all the perspective of all the presenters. So we will now enter into the Q&A sessions. We got several questions addressed in the Q&A chat here. So first questions, let me see. Okay, it's Okay, by the way, Prof. Irwandi Arif has regrets. Yeah, he just had a urgent meeting with the minister, so he cannot join us in the Q&A session. So. Okay, from Pak Rudi Hartono is Indonesia is listed as the largest coal export in the world. In fact, it reserve in very small 2% nationalization. Oh, basically, I see the questions might be addressed to Pak Irwandi. Pak Irwandi has left. Yeah. Pak Rudi Hartono asking about the government guaranteed portability of the coal for the PLTU or coal-fired power plant. So I guess Pak Rudi asking the questions on the DMO. We heard that the government is now working to finalize the so-called BLU, the unit special general unit of the government to oversee the compensation fund of the coal domestic obligations, or DMO. We don't know when it will be established, but the government is working on the legal aspect in the form of president's regulations. And we haven't seen the latest scheme of the BLU. So yeah, there are a lot of questions actually to be need to be explained by the government on the DMO aspect. Okay, the next questions in from Iron Wolf. Are European Union coal unloading ports suitable for capsized ships? Pak Freddy, your response, please, very quick.
Yes. So Rotterdam is one of the largest ports in the world, and it takes very large ships, larger than Cape sizes actually. So like the Valemaxes for iron ore and so on. I believe the two sort of main ports at Amsterdam will take capes, or certainly lightened capes. So yeah, they're very ready to take cape size vessels.
Okay, so there is another question from still Pak Freddy. Tony McDougall, question to Pak Freddy on the current conversation about energy shortfall for the coming winter in Europe because of the Russia-Ukraine conflict is perhaps short-sighted because of global warming in the near future. There will likely be as much as energy demand in summer to keep people cool as we have seen during the European summer. Should that translate the sustainable high demand for coal beyond Russia-Ukraine conflict, Pak Tony?
Yeah. Okay. Thanks for the question, Anthony. Shall I have a go at answering it, Hendra?
Yes, please.
Yeah. Okay, great. So I think it's very difficult at this kind of current stage to really assess the impact of climate change in terms of meteorologically what we can expect between fundamentally. I think the question is intimating that the demand curve will be sort of more balanced between winter and summer for gas. I think the immediate kind of and most prescient issue is that going into the winter shoulder seasons now, as we are, as of kind of in a month's time, we'll be nearly in October, and that's typically when the heating season starts in Northern Europe. There's this inability to get gas stocks up to a level which is consistent with historical norms, based on expectations for temperatures in the here and now. So I think that ultimately that's really where a lot of the price action comes from, is that this is kind of uncertainty over whether or not there will be enough molecules in storage in order to meet heating demand in the coming winter. I think the question's it's a good one, but I think that in terms of keeping the lights on and keeping people heated, that's really what the market's trying to do at the moment, is to get the price to a level where as much supply comes into the market as is feasible or indeed possible. I hope that I know that I haven't really kind of answered the question directly, Anthony, but I hope that kind of gives a a reasonable indication as to some kind of idea as to, I guess, what the market's thinking.
Okay, thank you, Freddy. Questions from Kinjai Makwana. This is Jimmy Deng. Yeah. What are the chances of China buying from Australia? What will impact price to? He's curious on the impact on the potential Australia buying from China buying from Australia. Sorry. Yeah, Pak Jimmy. Yes.
Hello. Hendra. So I already answered your question. So China started to ban the Australian coal in October of 2020. So almost 2 years. After that, no more coal from Australia to China. Recently, it looks like the tension between Australia and China is not so severe. It's not so hot anymore. And also both countries are seeking for some solutions to more like tradings. But this is from the government level. But from for trading as itself, currently the Australian coal is too high. Let's say the API5 NR55 Newcastle is close to $200. This is too high against Chinese domestic coal. Like in my last presentation, I make a chart on the arbitrage of Indonesian coal and domestic China coal. Even Indonesian coal itself, the lower CV, the NR38 and NR47 convert to domestic China NR55 is in some period of time is even higher than domestic coal. So I don't, in the short term, in the near future, I don't think there's any chance for Australian coal to China. Just a matter of a price. If the price back to $100 level, maybe China will show some interest in Australian coal.
Okay, thank you, Pak Jimmy. This is a question from Head Supply Chains Management. What is the outlook for 5,000 GAR mid-CV coal from India and China? Will the index gain or remain stable in the next 2 months? Yeah, next 2 months. So, Mr. Drift, what is your perspective on this? And Pak Ramli, maybe later we'll want to join to give your response on these questions.
Yeah, fine. Can you please repeat the question?
What is the outlook for 5,000 GAR mid-CV coal from India and China? Will the index gain or remain stable in the next 2 months?
Well, talking about the Indian perspective, I feel off the top of my head, it should be a bit stable, and we don't see any drivers pointing towards gaining towards the index, to the price.
Okay, thank you, Mr. Drift. Pak Ramli, you've been from India.
Yeah, I think from Indonesia for the next 1-2 months, it should be remaining stable or slightly softening, maybe by 5% or so in terms of price. It should not be much more, assuming that the current situation as it is. No change to the war, everything is just status quo. Then I do not see the price of this 5,000 GAR moving up. It will be like what Dix is saying. I agree with him. It's more or less pretty stabilized.
Okay, thank you, Pak Ramli. Question to is a GP from Pak Muhammad Wahyudi. With the soaring coal price, will the developing markets such as Bangladesh and Pakistan decrease the coal import from Indonesia, since their purchasing power is less far from developed markets? In this case, Japan, Korea, and Taiwan. This is also connected with the Japan, South Korea having less appetite to purchase coal from Russian coal. Pak Jive, would you like to respond?
Thank you, Pak Muhammad, for the question. Thank you, Pak Hendra, as always. I think the issue, guys, is the choice is not between coal and something else. The choice is between coal and having no power, right? And this is terrible because right now, natural gas is ridiculous. I mean, Pa Freddy's fantastic slides has really showed the point, right? Natural gas, 40 BTU, I mean, no one can afford that, okay? No one can afford that. And then also your power prices when you feed it through the UK, the BBC just said they're going to face 80% more heating bills. I mean, that's crazy, right?
Mm-hmm.
So, I mean, the options are you build a hydro dam, which Pakistan has quite a lot of hydro. They still have some more hydro dam projects. Banks are happy to finance hydro dam projects. Banks are not so happy to finance coal projects. But the choice is really between having coal right now or nothing, right?
Mm-hmm.
So in that case, it's not a question of purchasing power. It's a question of how much power does your citizens need, your economy needs.
Yeah.
And I think right now, until your renewable projects come on, you don't really have much of a choice. Definitely not natural gas.
Mm-hmm.
Yeah, thank you.
Interesting. Thank you, GP. Yes.
With regards to Bangladesh market, besides the main power users, of course, we know that there is always this other users of coal, mainly the brick makers, the cement factories, and the others. Yeah? These are the smaller users. But these smaller users actually, you can account to quite a certain figure. Yeah, maybe 2-3 million tons in a year. But what I've heard of is that the latest banking rules in Bangladesh is that now for them to open an LC, they have to raise 75% cash or in the form of guarantee, which means that actually, as far as the smaller industry is concerned, there will be lesser and lesser people who can actually import coal.
Mm-hmm.
Those who have the money and who can do the importation, I think will be making good money.
Mm-hmm.
And which will, the ultimate effect will be the price of coal will be going up. And again, that the whole lot will just boil down to costing. And it will. I think what we are really experiencing now is that with this increase in price of coal, you are just getting a lot of inflationary issues cropping up.
Right.
That's all.
Okay, so so does have an impact on the economic stagflation, inflation, and others. Okay, question from Pak Deepak. What are the chances? He's asking Freddy's projection. What are the chances of Ukraine-Russia conflict to resolve before year end? This is again the projection. Nobody can project on this, but I need your perspective on this. And then we have. Mr. Deepak continued that we have noticed that China demand going down. So can we say that if the conflict gets resolved, we might see the sharp decline in prices? Freddy, you may ask first, and then Jimmy after that. Yeah, thank you.
Sure. Yeah. I think it's an impossible question to answer the first part. So I wouldn't like to say. All I'd say is that there is a lot of political will to end the conflict. But I do like the way that the question's been framed, which is from the perspective of the market. What would be the impact of a ceasefire or some kind of ending of the war? And I think from the perspective of European market, I really don't think very much would actually change. So I think that the announcement to ban Russian coal from coming into Europe, I don't think that there'll be a reversal of that in the short term. Let's say, if by some piece of luck we were able to sign a ceasefire and the war was ended. Tomorrow, I don't think that there'd be a tangible impact on coal supplies from Russia for quite a long time to come. And I also think that the way that the mentality is shifted in Europe in terms of the gas market as well, and this sort of rush to diversify, it also indicates to me that that there wouldn't be a huge change in the market situation for a while.
Okay, thank you, Freddy. Pak Jimmy, you like to?
I think the price in this year, the price going up is mainly because of the sanction of the conflict. Even the conflict resolved, we don't know when the conflict will be resolved. Even the conflict resolved, I don't think the sanction will be lifted in short time.
Okay.
So I think, eventually the price going up is because of the new trade flows evolving. I think this is the main reason, and I think for now on, definitely the price will fall. Especially the price now is so high, and also the let's say Indonesian coal, the low CV, many rely on China and the Indian market. And China, the production increased so much. And also everybody say in the coming years, the economy is going to be very, very weak. And economy weak, then the demand of coal will definitely going down. I think the price in the long run is going to fall.
Okay, thank you, Pak Jimmy. This is another question from Kinjai Makwana. What is the coal price outlook for Q4 and 2023, upward or corrections? I think Mr. Drift, you can give your response on this.
Coal-fired outlook for 2023?
Yes, Q4 2022 and 2023. Yeah.
Right. Yeah. So definitely with the increasing power demand, as you know, as the industries and as the economy goes on and is improving and growing, and also the factor that you know, India is still adding many consumers going forward. So the generation, coal-fired generation is again going to increase. I think the only softness is because of the seasonality, wherein we see increased generation from hydro and renewables, but that's gonna decrease again somewhat around November. And we expect that the generation from coal-fired plants is again going to improve. So I think I mean definitely there's going to increase, but in terms of percentages, I think that's still that we have to figure that out. Yeah, but we're definitely expecting an increase.
Thank you, Mr. Drift. Another questions. It is just from Emil Milawarma, to Mr. Drift. Yeah, Mr. Drift. This is a very technical. It's a lower HGI means harder or more costly for pulverizing. Is vice versa?
Yeah. So harder the coal, definitely the challenges of pulverizing are there, and that's the opinion of people in the market, that these challenges are something that will actually impact Russian demand for power generation in India. And even if, you know, obviously it requires a huge amount of investment to change these grinding mills and to pulverize the coal. But even if that persists, I think the higher fixed carbon to volatile matter ratio is something that's going to be still a challenge.
Okay. Thank you, Mr. Drift. Jife, you've been studying about the energy transitions. IVI is a champion on the energy transition study. So what do you see the effect of the energy transition on the coal demand, especially in Asia?
I think Mahendra, is gonna be a process. It's gonna be a process, because right now you've got governments, especially developing economies, cannot afford LNG. 100% cannot afford LNG, right? They cannot barely afford coal, right? So the onus will be on hydro projects, and the onus will be on solar and wind, but these take time. So in the interim, yes, there will be demand for coal, no problem. But also this also brings another political issue into play, because we've just put out a report on Indonesian coal companies, and people don't seem to realize, but 8 Indonesian coal companies at the end of the first quarter have a total of $6.8 billion of cash. So, you know, if governments want to increase royalties, as there's what they've done in Indonesia for the new IUPs, and if people want to talk about windfall tax, I mean, that wouldn't surprise me at all, right? Because 6.8 billion is a lot of money. And these coal companies have been quite wise, because they've actually not gone ahead and built new coal capacity, because there is community, and also banks are not financing, and communities are against these projects. I mean, it is what it is, right? But what's interesting is, with coal prices being so high and going on until 2025, at least for next year, right? I mean, those cash balances are going to go up. And then you're going to have all sorts of distribution, government, taxation, and other issues, Mahendra. So it's a lot going on. Thank you, Pak.
Okay, thank you, Pak Jipe. We still have maybe 5 more minutes or so. A couple of questions from the others I'll address to the panelists. So it is from Pak Eka Darmawan. Mungkin ini buat Pak Ramli ya. Wider price gap, yeah, this is a very interesting issue. Yeah. Wider price gap between high or refer to global coal and Newcastle index with mid-low CVE, refer to the actual market in China, India, and others that compete with China, domestic, and Russia discounted coal. Force Indonesia supplier to subsidize royalty costs due to actual sales price lower than HBA. Increasing royalty tariff also give additional costs. Suppose Indonesia coal price increase close to HBA, or do you think China and India buyers still interested and can absorb those prices? Ramli, what is your perspective on this?
Actually, we have to make it clear. Yeah, there's a few things that is all differently attributions, because you see, HBA was actually created for the purpose of royalty collection. Okay, it was never used that as a selling price. Mainly when we do our normal trades, we are looking at ICI index as our benchmark for pricing as far as Indonesian coal is concerned. When you use Australian coal, then of course you might buy in Newcastle or global index or whatever index that you want to use. Mainly indexes that are more on the Australian side. So as of now, yes, I agree. There is a big disparity. You're talking about the disparity between this global coal or Newcastle index and our ICI index is very great. But the composition of HBA also has to be looked into it, because how HBA is arrived is a combination of indexes in which there is the global index, there is the ICI index, and then there is and also local prices, and so it's a combination, and that is the reason why this HBA is very much in line, or it's right, very much in line with Newcastle. Whereas ICI is totally different. It's very much more on the local aspect. Well, if you say whether buyers will buy at this price or not, well, you can see as far as the low CV is concerned, yes, the demand is there. People are still buying. Right. But for high CV and mid CVs, yeah, the market is very quiet. You see, because it's no longer becoming attractive. Because of the Russian coal going into India and China. Yeah.
Okay, thank you, Pak Ramli. Pak Jibiling, do you want to add on this issue?
Yeah, it's like a China.
Right, yeah.
China buy Indonesian coal is only because of the cheaper cost. If we use HBI, no buyer from China will buy any coal from Indonesia. That's the truth. That's a fact.
Okay, thank you. The last question from the audience, I'd like to address this to Pak Freddy. Let me see about the questions on the. We'll see. Yeah, the nuclear issues in France keeping coal demand strong. Is it broadly demand? Broadly demand in Europe or specific only to France? This is a question from Pak Muhammad Fauzi Setiadi. Pak Freddy?
Good question. Thank you for the question as well. So the nuclear situation in France is extremely important for the sort of broader European electricity market because of partly because of the interconnectedness of different countries in Europe. So for example, just to give an illustration, so France runs I think predominantly on nuclear. I think around about 70% of its electricity is generated from nuclear power stations, which have a sort of base load profile, which means that they run just as much normally in a winter as they would do in summer. There's no kind of peaking ability, which means that France actually imports quite a lot of electricity in the summer, but it exports a huge amount in the winter, and it exports predominantly to Germany, where obviously there's much more kind of much more flexibility, I guess, in a sense, in terms of the power generation profile. So with the inability of the French nuclear plant to actually generate, it means that there's less electricity going into Germany in winter, which means that there's much higher coal demand. So just a real quick answer on that one.
Okay, thank you. The last one, this is from Narendra Verma to Mr. Dir. Russia 6009 HG 61 seems to be softer than Indonesian coal for crushings or grinding. Mr. Dir?
Yeah, I mean, as per our understanding, Russian coal generally tend to be harder than Indonesian, even if it's a possibility, and if we consider, I mean, with my interactions with people from Tata Power, Adani, and NTPC, the demand for Russian coal for power generation is not something that they're looking at in the near term. I mean, we see that Tata is trying to blend Indonesian with Mozambique. They're trying to Mozambican material, but they're not looking at Russian material for power generation as of now. So that's why it's not something that I think there has to be some government intervention because NTPC could actually use some Russian material for power generation, but that is still that will only work when there is some government intervention as to increasing partnership with Russia.
Okay, thank you. Okay, the last one. So this is actually from another question from Kinjai, supposed to be answered by Pak Irwandi, but Pak Irwandi left already because of the meeting with the minister. Anytime export ban from Indonesia, I don't think the government will impose similar to what the government did in early January, but selective export ban might be applied. And another question of more royalty hikes for coal export. The government has issued a new regulation that set out the higher royalty for IUP holders. So I think that's all for today, the Q&A session. There are a couple of questions that has not been answered because of time constraints. So it's all interesting questions. So thank you very much for your questions. And I'll get back to Bu Desi, the organizer. Thanks to all the panelists. Thanks.
Thank you, Pak Hendra.
Thank you.
Okay, thank you. Thank you, everyone.
Thank you, Pak
Yeah, thanks,
Hendra.
everyone.
Well, ladies and gentlemen, this brings us to the conclusions of today's session. So we've come to the end of the webinar, Coal Market and Price Outlook in Second Half, Impact of Russia-Ukraine Conflict. Thank you everyone for participating. We hope the information and presentation that has been provided today was insightful and answered some of your questions. Thank you very much to our excellent speakers. Professor Irwandi Arif, he already left. Mr. Freddy Starmos, thank you very much. Mr. Jimmy Deng, Mr. Dhruv Drir, Mr. JP, and Pak Ramli Ahmad, thank you very much. And Pak Hendra Nadia as moderator, thank you. Thank you very much for your valuable time today and for your presentations in providing information and viewpoint on this topic. I would like also to give a very special thank to our wonderful gold sponsors and platinum sponsors as well on this event. Don't forget to visit our website, www.petromindo.com. Connect with our social media, LinkedIn, Instagram, and YouTube channel to get more updated information about news in energy and mining, and also our next prestigious events. Please be informed that we have the next upcoming offline events. The first one is Sumatra Coal Summit, which will be held in November at JW Marriott Hotel Jakarta, and also 2023 Indonesia Coal Outlook Conference, December in Bali. The registrations for these two events are now open, and there's 40% discount if you registered no later than next Friday. So this offer only applicable if you register within today until next Friday. So 1 week only, 40% discount. Okay, and now it's time for us to announce the 5 winners of Digital Wallet by Lintas Arta. Congratulations to Mr. Muhammad Ilham from PT Alam Jaya Bara Pratama. The second one, Bapak Henry Perdana from PT Ombilin Energi. The third one, Bapak Rizal Kasli. Wow, Pak Rizal, congratulations from Perhapi. And the fourth one is Mr. Muhammad Fauzi Satyadi from Kalimantan Prima Persada. And the fifth one is Pak Fajar Rusyatno. Congratulations. And our partner from Lintas Arta will contact you to distribute the prize. All right, everyone. Thank you. Stay safe, stay healthy, and stay connected. I hope you have a great weekend. I'm signing off. Thank you. Bye-bye.
Good day.
Terima kasih. Bye-bye.
Thank
Goodbye,
you,
everyone.
Pak Freddy.
Thank you, Pak Hendra. Thank you.